Everyone, thanks for clicking on my video and welcome to my channel, Bear Charts Trading and Investing. Tonight I'm going to go through a little bit of workshop trade that I put on yesterday. And if you haven't seen the first two videos, go back and watch those. It'll give you a bit of context on what I'm going to be doing. So we entered quarter position 125 shares at 37.69. I'm planning on entering another quarter once we have a test of the middle of this yellow zone, kind of towards the bottom here. Which if we zoom out on the chart, I just want to show you guys, um, this was the all-time high here, and then there was another big level that got broken here. So we're kind of coming back into these two zones, level on a level. So we're going to enter another quarter position there. And then final position will be at this open gap, which can be seen on a smaller time frame. If we go down to a daily chart, we have this rally open gap. It's the Western gap, or sometimes it's called the window. And if we get a retracement all the way back down to here, we're going to enter the final half of the position. In Build-A-Bear workshops, we're going to be taking 2% in a simulated $1 million portfolio to build out this position. So if it closes much below this, I'm not interested in owning Build-A-Bear anymore, and we're going to take it off the table. But I don't see that happening. So also tonight I want to cover Zeta Global. Going to go through a few rules that I have around investing. Um, so number one is we look at the time a company's been in business. Sometimes a long time private company will come public, but it's not always for the right reasons. Sometimes they're looking for liquidity injection, and other times it is the right move and the right timing. So Zeta Global is a data-driven cloud platform here that we're looking at in the Russell 2000. It was incorporated in 2007, so it does have that time as a public company, or sorry, not a public company, as a incorporated entity. However, it didn't start trading publicly till right around 2021, in the middle of the year. So even if the company's been around over a decade in the sense of Zen Global here, and the chart looks good, if we go out to a weekly chart, and why I put this on the watch list was the chart did look good at the time. It didn't have a lot of data, but when you come back and you look where it looked like before earnings, it looked pretty good, right? We had kind of this open gap here. It looks okay. I hadn't looked at the fundamentals yet. I just put it in the watch list. Um, but when you go, let's go back out here to a bit larger of a time frame, just so we can see the notes. So if the company, this company has been around since 2007, the fundamentals aren't good in this case. There's poor fundamentals. The future projections of growth are based on the future potential of the perceived value of the business, rather than value being derived from current operations and current revenues. So it's important when we do an investment like this, where we only invest 2 to 5% of your total capital on any given stock, because even companies that have been around a long time, have a good chart pattern and good fundamentals, can have surprises and can have downside moves on earnings. And in this case, Zeta Global went down 53% in 2 business days. If I come down here to the daily, we can see, one, two, boom, you're down 53%. So if this stock had better fundamentals, I would say this might be a good buying opportunity at this open gap, and it still might be. But since the company has poor fundamentals in this case, I'm not going to take a position here. But if it did have good fundamentals and it did have a bit more price action, as I have here in point four, it could be a very favorable entry due to panic selling around the earnings release. They released earnings a day ago here, and they missed earnings, and we got a big sell off. So wanted to note that if we go to something like Beazer Homes here, and we zoom out, now this stock has been around since 2004, so it has that 20-year track record as a public company. It got hammered here in the 2006 to the bottom in 2009, the great financial crisis, as it's known. And since then, it's kind of gone sideways. In the last year and a half, with higher yields, it hasn't done quite well. But we've had this nice basing pattern here. So I'm willing to take a stab at this. fundamentals don't show good for Beezer Homes. They're not a profitable entity. However, sometimes you can get a move technically, and you can have a trade where you're not going to get married to this company. You're not going to hold it for 25 years. It's not your Coca-Cola stock. But what we can do here is we could take a position here. We could do the same thing that we did with BBW, Build a Bear Workshops, is we could take a position, and if we do get a pop, kind of back up into these highs, that's about a 33% move. As we get back into the highs here of September 2008, before we had this huge sell-off. Um, I'm willing to take a flyer on this. We could do the same thing as we did with Build a Bear, where we're going to put on a position, quarter position now. We're going to do a quarter of position as we get a bit of a sell down to these prior highs. You can see we had a high here, high here, high here, high here. It got broken. So in traditional technical analysis, that it would be um, prior resistance is getting broken, and now it becomes support. So we got one test here and we moved higher and it couldn't quite come down again. So if we get a shoot down to this level, I'm happy to add another quarter. And if we get a long tail down to this level down here, which I'll show you on the daily, we could add the rest. We might not get all the way down there. And similar to Build a Bear, if we get below this little rally and we have a little base and a rally that never got tested, um, then we could add the rest of the position. If it gets below that, or it doesn't have any reaction and it's kind of mucking around in here, we're going to close the position. It's not worth trying to hold on to something with poor fundamentals and just to see what happens. So that's the trade setup for Beezer Homes. One thing I want to mention on Build-A-Bear workshops that I mentioned in my first video is I said that this level didn't get touched down here. But in essence, I didn't have the proper dividends set. And let me just find that here. Sorry. So adjust for dividends, I had adjust for special dividends is what I had initially when I said that this level didn't get touched in the first video. And we like to look at things with no dividends because we want to see the actual growth of the equity. We don't want to assume that dividends are getting reinvested every time, because a lot of times investors aren't going to reinvest the dividends. When we look at it from this angle, we look at that level, we have to redraw it, and we kind of have that rally into the base. We have 4 candles of base. We have that huge shot out. We did get a test here, so that would have been an ideal long position in Build-A-Bear workshops if we had been looking at it at that time. So I just wanted to point that out, guys and gals. Thanks for tuning in tonight. I appreciate you watching my videos. Hit the like and subscribe button, and we will see you in the next video. Thank you.